All right. Hey there, everybody. Happy Sunday. I hope you guys have had a great weekend so far. Um, I don't know how long I am going to have, so I do just want to jump right into things. Um, let's start off with the market and what it's been doing. So the S&P, right, we've talked about this pullback here overall, the bounce back up to the 100 period simple, and I talked about last week, right, how that's kind of the decision point, whether or not the price is going to be able to break above this level and actually get us back towards 4,700, 4,800 to test those prior highs, or if we end up failing at the 100 period simple, which could bring us back down towards the 4,400 level, bring us back down towards 4,300 to test those recent lows. And potentially, right, if things are really weighing down on the market, we could start to see an overall move lower. So we had a lot of fighting back and forth between the 100 period simple, which is this solid line here. Hey, Binary, great to see you. We also have the 10 period simple, which has been acting as support. So that was trying to hold up for the most part. Thursday is when that started to weaken out some, right? We went up the day prior, hit that level again, still weren't able to really get above 4,600 and hold above that level. And then we failed Thursday, but what was important on the failed Thursday is that we closed technically below the 10 period simple. So that whole time it was acting as support, it was trying to hold up, so we were just kind of in that chop and consolidation. But when we failed that level, that's usually not a good sign. So that to me meant that we could at least go down and test these price levels, which is around 44.60, 44.50, that range. And certainly if we failed that, 4,400 would be the next target. And we touched that level Friday. So 44.01 and 41 was the low that day. Pretty close. I thought we might be able to pin there. I did a really cheap lotto trade on that. It was like 20 cents, I think, is what we filled on it. Let's see. So yeah, 20 cents was that lotto trade. The idea that, it wouldn't be a bad risk versus reward on a 5 point spread, but I really didn't want to put that much capital risk out there because it was kind of like throwing the dart at the board, right? It didn't have the um, necessarily the max pain level there with it. Sorry, I was trying to think of what that word was. It didn't have the max pain there with it, where it kind of gave that extra emphasis, almost that magnet to kind of draw it into 4,400. And we were actually talking about this in the Profit Recycling Mastery on Friday going into the close, but we saw it go down and test that level and immediately bounce. And so when you kind of see that, right, unless the algos, right, kind of can bring it and draw it back down right into the close, it's not likely that would happen. So you would have had to be really quick on a day trade. If you did, well done, right? Because that looked good. But if you didn't, right, if you're like me, who you're just going to let it cash settle, or maybe you're a little slow, it bounced back up, and then we ended up closing around 44.18. So right now, 4,400, which is that level that we talked about last week, that is holding currently as support. But certainly, right, there are a few bearish things now weighing on this, other than the fact, of course, that we failed the 100 period simple. We can see that the trend is technically turning bearish. Hard to tell right now, but the 30 has officially crossed below the 100. And of course, below both of those is the 10 period simple. So now we are starting to be in a stack down formation. So that's usually not a good sign, especially when you're trending below the 100. Right, that can add a bit of bearish weight to it. So if we do go back down and test 4,300, which I don't think would be surprising next week at all to see, and we'll talk about the other technicals in a second, but if we do go down and test that level and start to break it, right, then more than likely we're going to go back down and surpass this low here. Maybe it's just to 4,200, right? Maybe it's a stronger sell-off down to 4,100, down to a stronger support level on the weekly or monthly chart. But overall, right, it wouldn't be too surprising to see that turn. A few other things pointing to this potentially. Momentum's had a nice reset towards the zero line. Just like in a bullish trend, when we get that reset, if the bars start to pick back to the downside and turn red, that usually means, right, another move lower in the trend, especially when the trend is bearish. So we have that potentially setting up. We don't have the red bars necessarily building up yet, but what we are seeing is that the green bars are starting to flatten out. And that's usually a sign that the red bars will pick up, right? And then we could end up having that other leg lower. We, of course, are starting to get a bearish signal on the compound breakout tool. Now, if this cancels out like Monday or Tuesday, then this to me is still a pretty choppy signal and is hinting more at consolidation. But of course, right, we start to have that bearish weight when we're technically in a bearish trend, especially if we start to break these levels here. All right, that could lead to our next leg lower. And then we have a squeeze printing. In regards to these true lows, right, they had a beautiful move up into resistance, but I'd be a little cautious about playing the longer term trend at this point with the fact that we failed this level. So if you're playing off those lows there, your time to take those profits was at the 100. And certainly on Thursday going into Friday, right, once it started to fail there, hopefully you protected the rest of your capital more on the bullish side of things. So let me go to the monthly chart really quickly first. So I know some of you guys are like, Allison, right? If you know me, you know I'm usually a bit more of a bullish person overall, right? If the trend's up, then I'm not going to fight it. And that's typically because we're in a bullish trend. But the things that are making me cautious right now, outside of inflation, right? Outside of global politics or anything like that, outside of rate hikes, all of that stuff, just purely going off the technicals here. On the monthly chart, we have been at exhaustion, and we have been trying since October of last year to start to print a red bar and confirm the top of the axis here. We finally got that red bar to print January, and of course we're seeing it follow through this month. On top of that, we are finally starting to get a pullback signal on the compound breakout tool. So that usually means that, you know, if you're playing from the bullish run back here, you protect the rest of your profits if you haven't already done so. And then you look for a potential pullback into resistance. Now, right now, we're kind of hanging out around the 10, right? That's around 44.59, 44.60. Notice how that was the level I mentioned on the daily chart that we kind of kept hitting and stalling at. That's right at monthly support, so it makes sense why we were kind of pausing there. But of course, if we start to break that, the next big support level, at least on the monthly time frame, is 39.14 with the ATR trailing stop, at least for me. That's, you know, not too far away from 4,000, that big round number. That's going to be a really nice psychological level to go and test if we do continue lower. We, of course, made a bearish divergent bar last month. And technically, all of these divergent bars that have been printing the last, let's zoom in here, like 5 months now, all of them have technically followed through. Now, they've barely followed through, but they've followed through. And that's usually why back-to-back divergent bars are more a sign of chop than anything else. But of course, we know the lows from last month were down around those daily lows I talked about around 42.22. So that's why I mentioned it wouldn't be too surprising that if we do really start to break 4,300, right, that would be our next target to the downside, that we might just go to 4,200, right? We might not go much past that. We'll have to see what the technicals are looking like. But if it keeps following through with the overall chop sentiment here, then, you know, it might just be to 4,200 that we see, and then maybe bounce back up and we see overall consolidation still. Keep in mind on the monthly time frame, right, when momentum's resetting, like we see here, we don't necessarily need the price to pull back. We could just see consolidation, and that still allows momentum to reset, just like on the daily chart, right? We had a bit of a bounce up here, but then we started to consolidate, right, while momentum to continue to reset. We don't necessarily need a strong bounce back to the upside for momentum to reset again. So, you know, we'll see what happens here. Obviously, if we're a bit more bearish, then we want to take a look at our Tesla trade, because if the market's bearish, there's not going to be much that holds up with it. So if anything, we might need to switch sentiment to bearish trades, right? Certainly, I wouldn't mind in here putting on an SPX butterfly. We did this in the mastery, but I wouldn't mind doing this in the challenge account next week if we get confirmation of a move lower, but something like a broken wing butterfly. So this is what we actually put on in the profit recycling mastery. We paid about, I think, $250 for the trade. It is a, oh, hold on. I realized y'all can't see it. There you go. You should see my Tastyworks now. So it's a broken wing butterfly with that pin around 4,300, right? With the idea that by Friday of next week, if things remain bearish, we could go down and test that level. It was only about a 250 cost basis. If we get the pin, it's about a 1745 profit potential. If it goes completely in the money, it's still, well, our fill's 250, so it's a 1750 profit potential. If it goes completely in the money, right, if the market really starts to dive bomb and sell off, then we give ourselves that forgiveness factor on this trade of still about a 750 profit potential. So obviously not a bad risk versus reward. Now 250 at this point in the challenge feels like a little bit too much risk in my book. So I'd probably look to alter this sum like the 15 10-point spread. That's a bit better of a risk tolerance for that account. It's $1.35. Still allows for a very nice profit potential if we're hanging out around 4,300 to try and play the pin idea if we really wanted to do that, right? That's 1365. If it goes completely in the money, still about a 365 profit potential, right? So still not a bad risk versus reward, definitely over potentially a 200% return on the trade. So, that looks pretty good there. So I wouldn't mind doing something like that for the challenge account next week. We can, of course, look at and see how things open Monday. Of course, one of the events Monday is they're having a new Fed meeting, right? That was not prior, wasn't on the books before. So we have that coming up. That could adjust the market one way or another. So we do want to be mindful of that. And then, of course, with everything globally happening, who knows how that might affect the market. But we'll just continue to play off the technicals that we're seeing here. Let me close down Tastyworks really quick. Let's go back to the trades that we're in and talk about that $500 challenge. Mint monitor. There we go. Right, we did a slight lotto trade on SPX at $1.15. If I remember correctly on this one, if you day traded it, you got a profit. I did not end up day trading this one, so it ended up being a loss because it did not settle there. So that's in the hole currently for this month. Then we have the Tesla trade, which we're still currently in. The idea behind this trade, and we'll pull up the chart in a second, but the idea behind it was that within the choppy environment that we are in, Tesla too would chop into resistance of the 100-period simple, and that in turn would allow us a quick profit. Now, as the market's falling apart, like I mentioned, so is Tesla, so we might need to flip that trade idea around and take a look at potentially a bearish idea or something else to kind of offset that 160. Then we also opened Amazon. Now, I cut this way too soon. Totally admit it. I was literally staring at this like the first half of market. I kept trying to close it for a bit more, and they just were not letting up on that premium Friday. And for anyone who is like really paying attention to the markets Friday, right, for the most part, it held up until a bit later in the day, and then it started to fall apart, right? And so that's what happened with Amazon, where it was kind of holding up some. To me, we should have still been able to get a bit of a better profit on this. Let me pull up Amazon on the chart here. But we are in for the 3,100 pin, and just like the SPX trade that we talked about, the idea behind this is if things fell apart, we gave ourselves that forgiveness factor on the trade. So here's Amazon. Let's go back to the monitor page just to remember the strike. So we are in the 3115, 3100, 3190. This is a 15 10-point broken wing butterfly, and it was a little expensive in regards to those. Usually I would say get under $2 for them, but this time we paid up oh no, we did. We paid $1.20. Okay, I was looking at the closing order. We paid $1.20 for it. I was like, that was really expensive of me. So $1.20 is what we paid, right? The max profit potential, if we got the pin, which on Amazon we would never hold that long to avoid that risk of assignment, but if we did, it would have been a 1380 profit potential. If it went completely in the money, where all the strikes ended up going, then it would be up to a 380 profit potential on the trade. So, once again, not a bad risk versus reward. For anyone who was in either the training room Friday at Simpler Trading or the day trading room in there, and I even talked about this at the start of the options room, if you're with me, you know that my eyes were like partly glued the entire time of those sessions to Amazon because I kept watching the intraday charts. Um, and I'll pull it up now on the hourly. Or was it the 30? It was probably the 30 that I was watching because it was the 100. So we saw this nice move down. The 100 period simple on the 30-minute chart was catching up with the price. And so right around this time, right, we kept kind of hitting that level and stalling. And so we kept getting towards our strikes. It kept bouncing up. And technically, right, at this point in the day, Amazon has definitely moved lower compared to the prior day. So for what you typically look at on those Friday Amazon trades, the idea is Amazon typically sells off on a Friday. That's just how it goes. A lot of the times you will see that move lower compared to Thursday's trading. And so you can usually put on some sort of bearish trade idea, right, and take a quick profit on it like we did. But what I didn't want to see happen is the move lower followed through, but then we bounce into the close. Every now and then that happens on Amazon. Obviously, the market was trying to hold up as well. And even when the market started to fall apart early on, Amazon wasn't quite following through yet. Certainly, we weren't breaking the 100 period simple at that point here. For those of you who follow along with the voodoo lines indicator, I know that there was a voodoo, I think it was a snow line around 3110. So, that could have ended up trying to hold as support as well. So for myself, I was like, okay, Allison, let's just take the profit on this. Otherwise, I will not be paying attention to anything else throughout the day until I actually get the fill on this. So I took it off for 240. So it was a quick 100% return, $1.20, not too bad. I was really looking to try and get out of this at around 360. That would have been a 240 profit potential. If you held just a little bit later in the day with how that chart fell down, right, you certainly would have. We ended up closing at 3065. So we went right to that 3100 level, stalled there a bit, and then instantly broke it. So if you held it closer into the close, you should have been able to get around a $5 fill on the closing order and certainly been able to get that better profit. And if you did do that, well then well done, because your risk on Tesla is completely covered too if you followed along with that trade as well. Yeah, definitely add it to your notes idea for sure. Hey, Mitzi, great to see you in there. Yeah, so let's go back to Amazon on the daily. Kids are still down, so we're good there. I do think we could see some more down, right? Just kind of like with SPX, technically on the true lows here, right? As we're in the bearish trend, usually when I see something like that, the first thing that you try to do is just play it up into resistance levels. And if resistance stalls, you take your profit. And you can see that's exactly what happened here, right? You went up into resistance, got close to the 100, not quite there. Bollinger Bands aren't trying to flare open, so that was your clue that they're not anticipating a move higher at this point. And so we're starting to give it back up, just like we saw on SPX Thursday, right? SPX started to break those moving averages. And then the next day we went up on Friday, tested them as resistance at the high, completely failed, and by the end of the day, right, we were moving lower. Notice what happened on Friday for Amazon. Amazon crossed below the 30, crossed below the 10, closed below both of those levels. Compound breakout tool starting to give you a bearish signal. And though momentum is technically crossed above the zero lines, we see this all the time on bullish trends where we'll have exhaustion levels, momentum will reset. I don't have a good example of it on here, but it will basically be where it barely crosses below the zero line and then it picks back up, and so does the bullish trend, and we get that kind of almost, I wouldn't say it's like a slingshot move, but it's like basically a dig and then it goes right back up. So I'm a little bit hesitant about this because usually this is bullish sentiment, right? But everything else about this is acting pretty bearish right now. So if we start to get any sort of red bars here immediately, especially if it already starts to cross back down below the zero line in like the early part of next week, that to me is a bit more of a bearish sign where we could start to see it pick back down, and in turn, right, we could see this move lower. Now my first target on Amazon would only be down to 3,000. just like with SPX, right, that first target was just to 4,000, just to that psychological level. But as you can see, right, there's plenty of room below 3,000 for this to continue to the downside. 2,800 is going to be a pretty strong support level, followed by 2,700 because the ATR trailing stop is right around that level. I think it's at like technically 2,733. So you have that as support. The Bollinger Band, which is still flat currently, is at 2697. So if this remains flat and the price continues lower, I would only be looking for a test of these lows. If the Bollinger Bands start to flare open to the downside, right, then be very cautious about how this level holds support because we might fail and continue lower as well. Now we'll have to wait and see how this opens, right? If we open maybe a little lower or open and test 3,000 and then immediately bounce, we could still very well just be in chop at the top of this range. Certainly, here's a few things to remember about Amazon for the bigger picture. One, on the weekly chart, it's been trying to print true lows, which I do like, but the Bollinger Bands have been opening to the downside. So usually my rule on that is I have to wait for the Bollinger Bands to start to flatten out before considering it. Also, when we look at the weekly chart here, Amazon was not able to hold above the 100. It made a bearish divergent bar. So once again, that adds to that sentiment that we might follow through with a lower low. Here's my slight pause on this, right, for it actually continuing further to the downside, is on the monthly chart, we're still doing a pretty good job of holding the 30, right? And the 30 period simple is at 28.59. Now, once again, if the market does end up pulling back, we cannot expect Amazon to hold up, right? First of all, it's a very big component of the market, but if the market sells off, a lot is probably going to go with it. In general, Amazon's been trying to reset off of monthly exhaustion levels since last year. And what did we talk about earlier in the session just now? We talked about how when momentum resets, it doesn't necessarily mean a pullback in the price. It could just be chop. And overall on this monthly chart, I would argue that this is just consolidation, right? That's all we saw last year, really, when you look at the weekly time frame. And though this does feel like a bit stronger of a dip, when you see the support levels that we're at, when you notice that these lows aren't too far away from the lows that we had back here when we kind of first hit those highs and started the chop, it's like, okay, yeah, no, we could still just be in consolidation. Certainly, this is still pointing to consolidation. If we do continue to consolidate, right, these squeezes can build up more energy. But I was talking about this last year on Amazon, where I wouldn't be too surprised if it just chopped for the rest of this year too. We'll see what happens, of course. And if it does start to break below the 30 because the market really can't hold up, then of course 2,500 is going to be a big level. On the monthly chart, 2,200 is the next kind of technical level I have other than the psychological levels to play down into it. So it could, get a bit bigger of a pullback, which I wouldn't mind, because if I could get a monthly true low on Amazon, like you did back here, right, that's just going to tell me I finally am getting a good price to try and buy in this thing. So wouldn't mind that. Very nice. The fact that they closed you out for 551 is awesome, because typically when it's in the money like that, the difference of the spread width, which in our case was a 15-point debit spread, 10-point credit spread, so that difference between the two is 5 points. Usually that's what they'll try and close you at, right? Or just slightly below that at like 495. Because technically, like if it was SP action and it went into cash settlement, then that's what it would end up closing out for. So the fact that they give you 551, that's always fun. We had a trade like that in the Mastery. I can't remember what trade it was, but we had one where it was slightly in the money and they gave us above the spread width fill, and I was like, hey, I'll take it. So, yeah, of course, Mitzi, of course. So let's go over to Tesla now. Let's go back to the daily. Yeah, so your right risk on Tesla might be completely covered because of that nice win on Amazon if you took that trade as well. For myself, I'm going to need to look at putting on something this month, right, to try and offset what is likely not going to come back in my favor at this time. So prior, right, this is what we were seeing. We are holding the 10 period simple as support, very much like the S&P. I think we put this on, what day did we put this on? 2-9. So we had the bullish divergent bar that was starting to follow through. Momentum was still going towards the zero line, right? This is still a sign that you usually will go up and test resistance. And of course, the 100 period simple was like at 978, I think, at the time whenever we put this on. So the idea was if we just go up and test that as resistance, not necessarily even break above it, just go and test it, it would put our spread, which is the 970, 975 that we jumped into. There it is, 970, 975. And it would put that in the money and therefore allow for a quick profit, right? Instead, we started to sell back off some into close. Thursday, we went back down to the 10, but we held the 10. So for me, that was still a sign to continue to hold this trade. And then Friday, we started to fall down. I really wanted to give this till around 880 to see if it could continue to hold. But into the close, right, it really started to break that level. And when I finally took a look at it to see if maybe I just wanted to protect capital on the trade, I think it's only like worth about 28 cents at this point. Which, I mean, I guess is something I could protect, right? It's down 131 currently. We jumped into the trade for 160. Yeah, so it has like 30 cents left. So, I guess I could have protected that capital, but in my head, it's like, okay, well, I'll just leave it on because that way if it bounces and increases a little bit in value, maybe we can get out for some. But otherwise, right now, this to me looks like it's trying to move lower. I also talked about simpler in some of the rooms, potentially trying to maybe switch this trade around directionally. So sometimes it's what I like to call profit recycle for management, right? The idea would be we do something like harvest the profit on the 975 strike, because as you can see, that's very profitable. But then we flip the trade idea into more a bearish trade idea or an iron fly by turning this from a debit spread into like a credit spread, right? Or an iron condor or something. But for me, this is too dramatically different from the actual trade price that we got in for each individual strike. So for the challenge, it's just not going to make sense to try and do it that way. Which means I'd rather just look at a brand new trade idea. Now, of course, just like we talked about with the SPX trade idea or even Amazon, right, with a broken wing butterfly potentially on that again next week, we could easily make this up and we wouldn't have to necessarily keep it in the same symbol. I personally am not like, I know some people are very, I don't want to say anal retentive, but you guys get the idea, right? They're like they need it to be within the same symbol, and to me that's almost like revenge trading, right? Like, man, you took my money, therefore I need to put on a trade in this symbol in order to make that money back. And it's like, no, I don't need that. Let me just find a much better setup out there, and that's where I can put my capital into it, and I can make my money up that way, right? I don't need to put on the trade in Tesla in order for that to just look all nice and pretty in my account that it's technically positive. Like, I don't care. As long as the overall account is positive, that's what matters. Now, as I say that, right, we could look at a trade idea in Tesla because, like I said, this is very much like the market where it's starting to look a bit more bearish. The 30's about to cross below the 100. It's basically right at that level. Just like with the market, we closed below the 10 period simple technically on Thursday. It was kind of hugging that level, so I would have given it room, like I said, down to 880. But it did technically break it the next day. We broke that. We broke 880, which was that price support level. So, right, we really started to fall down here. Bollinger Bands, I would argue, are still a little bit flat, but they're definitely pointing more to the downside. So obviously that adds bearish weight. Momentum, not as much of a reset that I would typically like to see towards the zero line, but it has technically pulled back off of exhaustion levels. It's giving us a red bar. So usually if you can get two in a row, that means it's starting to reverse, and obviously that would be a bearish sentiment. We have a squeeze, right? So that squeeze could end up firing to the downside and taking us lower. And we've canceled out of the pullback signal in the compound breakout tool, meaning this was our move up to test, right? Where did that print? So this was our move up to test resistance. Didn't even quite get to the 100 period simple like I was anticipating. and then we've already canceled out of it. So usually that means you're going back either into a consolidating or a bearish trend signal. When we take a look at the lows here, the lows are around 820 to 800, right? So if we really felt the need to keep this within the same symbol, which as you guys know, I personally don't really care. But if we wanted to do that, then we could once again take into consideration something like a broken wing butterfly. And I know I keep going to those, but I really feel like unless you're trying to do some intraday trading, those are really forgiving in this current market environment. So really quickly, because my son is getting up, so I do have to go here in a second. But something like this, right? This is a 15 10-point butterfly. It's about a 150 cost basis. So once again, makes for a great risk versus reward. If Tesla starts to see that squeeze fall apart to the downside, right, it could still easily cover the risk from our bullish trade idea and still get us out of profit with that, $5 fill, let's say, for let's even say $4, and we get in at $1.50. If we close it out for $4, that's still a $2.50 profit potential, covers that $1.60 risk on the call side, and still nets us a profit overall. So we'll take a look at that next week, right? Obviously, if the markets are going to bounce off whatever Fed news happens Monday, then, we'll just keep looking at more choppy trade ideas, maybe some iron condors, and take advantage of that. But if things do start to fall down, we do have those bearish trade ideas in mind on a few symbols that we could look to implement to the downside and still, right, keep well within our risk tolerance in this $500 challenge. So I hope you guys have a great rest of your weekend. As always, may the trade be with you. Be mindful of your risk in this environment. And I look forward to talking to y'all next time. Bye.